Welcome to today's webinar, courtesy of the Kentucky Small Business Development Center in Louisville. Discover no-cost, valuable business services to help you thrive, whether starting your entrepreneurial journey or scaling your existing business. We have the resources and expertise to help you succeed. For more information, please visit our website or text 502-977-5800. Thank you for joining us today. Feel free to use the chat feature to ask questions or engage with our speaker. Let's get started.
Hi, welcome everyone. Thanks for joining us on another Tuesday here for our Toolkit Tuesday. It's always glad to see everybody. And as always, I'm joined by my good friend and coworker, Janet Flaw, and our newest addition.
Hi, who's my special guest today? Yeah.
And what is the name of the special guest today?
This is Piglet.
Piglet.
He's a little camera shy, I think. So
yeah.
good afternoon, everyone.
All right. Well, I see everybody kind of joining and popping in, and as everybody kind of gets settled in, ready to go, if you wouldn't mind, just look at the bottom of your screen. You should see the toolbar, and if you don't, just hover over there with your cursor. It should pop right up. There you see the chat feature. Now you'll see the Q&A. Don't be tempted by that. Stay with the chat. Stay with me now. Stay with the chat. And then click on the chat, and then just so that we know that you're at the right place, you can hear and see us, just type in your name and say hello and where you're joining from. Kind of a fun little thing for us to see where everybody is popping in from. So there's Janet, there's me. So I can see everybody kind of coming in. There's Andrew. Good to see you, Andrew. He's also in Louisville with me. Hey, Chris. Louisville, Jim, Trimble County. Hey, Jim. I haven't seen you pop up in a while. We should connect. See, I'd like to hear what you've been up to. Hey, Jenny, Highland Heights. Yeah, up in Northern Kentucky. Spent quite a bit of time up there a few years back. Had to run our SBDC center up there for a while, but really enjoyed it there at Northern Kentucky University. So, yeah, if anybody else wants to say hello, I know you're out there because I can see you. So just say hello. But all right, well, anyway, this is a really important subject we're going to talk about today because I get a lot of people that ask me about their credit. And, the hard fact is if you're an entrepreneur and you're starting your own business, 9 times out of 10, your credit's going to take a hit. Because, if you're all in, you don't have really a steady income, as a business owner, you're basically the last person to get paid. And, these things can have some negative factors and affect your company's growth because when you need to access other capital, it's kind of hard to do so sometimes. So we've invited our good friend, Ellie from Park Community Federal Credit Union. Hey, Ellie, are you there still? Yeah, okay, cheers, good.
Hi.
Here we go.
I'm coming.
There we go. Yeah, so we just thought we would get some real good advice about how to protect your credit, how do you access your credit, some myths about credit, what you can do to protect it and repair it. Again, we get asked these questions all the time, and I'm so happy that you're here to kind of help us out, Ellie.
Yes, thank you for having me today. I'm excited.
Yeah. So as we go through today, if you have any questions or comments, just put them in the chat, not the Q&A, and we'll have a little dialogue with Ellie and figure things out. This is a great opportunity for you to get your questions answered. And Ellie's a true expert and part of the financial community and a great institution at Park too. So we're always honored and happy that you're here, Ellie. So I'm going to step back and let you just drive the ship from here on out.
Okay, thank you so much, David. Let me get my screen going here. As David said, I'm with Park Community Credit Union. I am the Senior Business Development Officer, and I've been with Park for about well, we probably don't even need to say how long that is, but pretty long, over 15 years with Park Community in this role. I am a certified financial counselor, and we are working towards having everyone in our credit union also have their certification as well. So we work with everyone, personal finances, business finances, all you think of it, we do it on their financial journey. So today, we're going to go over Credit 101, and we're going to touch on some basic topics about credit scores and the do's and don'ts and the myths and things like that. So please, ask those questions and we'll try to get to them at the end. And I'll also provide my contact information for any follow-up from that point on. But today, kind of like what I said, we're going to talk about why credit is important, your credit reports, how to get them on a regular basis and keep track of those, what your credit score could impact from a small business, lending options, and also personally, and then building and improving your credit score if you're just getting started with your small business, or if you've had, life happens, things like that. So we'll talk about how we can take steps to work on credit score and getting them in a higher range. And then Park, at the very end, I'll go over like some additional resources that Park offers, but let's just jump right in. So obviously we all know that our score is very important. So, understanding what credit is and what all it leads to is the first step. So for small businesses, it's, how do you get that next loan? How do you get that line of credit? All of that depends on your personal credit score until you're able to establish a very large capital. And then you can do some things that maybe don't impact you personally, but can impact your business credit score. So personally, it impacts your ability to rent or purchase your home, your ability to keep some jobs. For instance, in the financial world, we all do have to run our credit score in order to have employment. And then it doesn't prevent all the time, but some areas you have to kind of build it up to work in the realm that we do. So just keep that in mind. Your ability to open the bank accounts, access the loans or credits, like I mentioned earlier, and then other things like your car insurance, cell phones, things that you don't think about on a regular basis that we all take for granted that we have, but your credit score can absolutely impact those things. So it's very important. So what is your credit report? It's clearly a statement about information that has all of your credit history, your card activity, any way that you've managed those credit cards, that's all in those credit reports. So there are 3 credit bureaus that we look at. And I'm sure all of you all are familiar with these names. So we're just some of this is just kind of review. Equifax, TransUnion, and Experian. Those are the 3 credit bureaus that everyone looks into. And it's important to note that not every financial institution pulls the same credit report. So if you see something on one credit report, you might not see it on another credit report. So it's really important to have the information from all 3 credit bureaus about your personal finances and make sure that you're just keeping an eye on all things like that. So for instance, if you come in and apply for a car, we might not see that you have a certain credit card because it's only pulling on a different credit report. We try to average the credit reports together to make sure we're getting the full picture, but just keep in mind that sometimes it does look a little different credit report to credit report. And apologize if I'm saying a lot. I'm going to work on that. So what's on your credit report? Your personal information, your credit accounts, collection accounts, public records, and any time that a company has looked at your credit, whether that's a hard pull or a soft pull, we will be able to see those as well. So that is what you can see when you pull your credit report. What's not on your credit report is what you make for your income. It does not contain information about your assets, your savings. Typically, you're not going to see your rent or utility bills on there unless for some reason you've gone into some late payment, and then those will start to our credit, you've been turned in. Then you'll start seeing those type of things on there, but typically they are not on there. So we like to make sure everyone knows there are great resources out there. Credit Karma, I know a lot of people use that. That's a great place to start. You can also go to your local financial institution. We help people all the time. You can ask them to pull your credit, sit down with you, go over what's in there. But the one that you can get for free every year is annualcreditreport.com. It does not cost to pull your credit from them unless you're trying to pull a credit score. And you can see where at the very bottom of the slide, it does say that, if you're looking for the credit score, you typically have to pay $8 or maybe right around for a cost just to get the credit score. But you can see everything that's on your credit report by going there at annualcreditreport.com. And I believe you can pull it more than once a year at this point to have that. So it's a very important thing to keep checking. I do it often just to make sure that nothing has been placed there that shouldn't be placed there, especially if you have children, right? Things could possibly, or if you've had anyone pass away in your family. Those are just little tips that I like to share. And I can share that again in the chat if we need to later, but that's a great place to pull your personal credit. So a lot of times, you'll find when you're looking at your credit score, there may be something that you don't remember opening, or maybe it doesn't belong to you, or it could have been a crossover in a junior versus a senior family name, things like that. So this is how you can file a dispute after you've reviewed it, or even if you just have questions on why something's on there that you don't recall. You can go the credit or collection agency if they've reached out to you, because you have to do that. But your best bet is to reach out to those credit bureaus. And then, of course, you can also reach out to the Consumer Financial Protection Bureau, which governs it all and can help you out. But there are ways to get those things that you don't think belong on your credit score off, and people can help you get that done. So currently, with the state that we're in, we do see a lot of fraud that is happening, and that is like a whole different topic of diving deep into it. But if you suspect that there's identity theft on your credit report, we recommend that you go into those credit bureaus that I mentioned earlier and do a credit freeze or a credit lock. And when you go onto those credit bureaus, it walks you through the whole process on how to take care of that and what you need to do to set that up. It's very easy to do. And then if you actually need to report the identity theft that you have found, then there is the website that you can do that for identitytheft.gov. So there's just some tips and tricks on how to handle reviewing what's on your credit score, credit report, and things like that. So let's dive into what is a credit score. I know we all are very familiar with what your credit score is, but it's always nice to have a good refresher. So credit score is the credit risk of your likelihood of your repayment, correct? So credit ranges from 300s to 850 being the highest credit score. And it is possible that even as you go through life stages, that your credit could still be a 0 or very limited due to how you've handled some of your finances when you first started out in your early 20s and things like that. So this is just kind of an overview of what all that looks like. What impacts that credit score in general is your payment history. That is 35% of what impacts that credit score. So payments on time is very important, and you'll hear me say that maybe like 5 more times throughout this presentation. 30% of your credit score is impacted by the amounts that you owe to creditors. 15% is the length of credit history that you have. So how long you've had a card open, how long you've had a credit card open. 10% is the new credit. So opening new cards does impact. So we like to recommend, and you'll hear me say this again, do not go and open, 5 new cards during the holidays for the special offers. That does impact your credit score. While it's not a huge portion, it could take a hit if everything else is looking really on point. So keep that in mind. And then 10% of your credit score is just your credit mix. It's just an overview of everything that you have going on, and it's a very small portion of it. So that's what impacts your personal personal credit score. And it's so important to know this because as an entrepreneur, as you're starting out, or even if you're, in the maybe 2-3 year range of new business, your personal credit score does impact what you're able to do, right, for your business and moving forward. So knowing where you are personally is step one. even after, like, while you're writing your business plan and looking for funding and things like that, it's really important to take a pause, pull the credit reports, and figure out what you need to do to either clean it up or help build it so that you can take your business to the next level. So minimum requirements for credit score, and you're going to hear a lot of myths out there, but these are just some that Park likes to kind of hit on, so that people know when they're looking at that. At least one account open for 6 months or more. That can vary from credit bureau to credit bureau, but that's kind of what we typically like to look at. At least one undisputed account reported to the credit bureau within the past 6 months. So that means like no late payments, things like that, that is showing within the last 6 months. No deceased on the credit report, meaning you know, kind of speaks for itself. And then the things that can hurt your credit score. Missing payments, like I mentioned earlier, that is the biggest part of your credit score. And a quick reminder that we like to share is it takes up to 24 months to rescore your credit score after just one late payment. So, if you know you're going to be late on a payment, figure out a way to at least pay a little bit, work with the creditor that has it so that it does not take a hit on your credit that it shows up as late. Because 24 months to restore that is it's long, but it takes a lot of work. And we understand that life happens, but this is the number one thing we all need to pay attention to. Closing them, if they're at their capacity, or you're closing credit cards, you're opening them and closing them, that hits your credit score. So watch that. And then your spending habits. Are you keeping them below the 30% that's on there, which is what you should do? Like, you can get it up to 30%, but are you able to pay it off? So make sure if you're opening a credit card that you're keeping it right below that 30% so that it doesn't impact your credit score. The more you owe, and you can't pay it off, the more it hurts your credit score. I just mentioned closing credit cards. It can hurt your credit score. Obviously, if you're doing them frequently, it hurts more. But if you have to close one that you've had open for a while because of different things, or you're no longer utilizing that, those are taken into consideration. And then excessive credit card inquiries, not injuries. Of course, those are your soft and hard hits that you're in there that you see on your credit report. So if you're out car shopping is one that we like to use as an example, or if you're looking for business lending options and people are pulling your credit, keep in mind that will hit. So talk with your financial person, talk to your credit union, talk to me. We'll get you pre-approved, things like that. So you're not out there, shopping a lot and everyone that you talk to is pulling your credit. So just be mindful of that. And again, lots of new credit. I mentioned that earlier. If you're taking all those deals that you get in the mail or that you see during the holidays, I just like to talk the holidays because that seems to be when it's the biggest rush of them, that can impact your credit score. That last one, borrowing from finance companies, that's where we like to talk about like the payday lenders. If you're going to borrow from those type of things, or quick cash type of financial institutions, their rates are at a high percent, and the turnaround time that they require to pay back tends to really affect credit if you're not able to meet those requirements. And then plus you're just paying a really high interest rate. So we like to caution people to steer clear of that if you can. It's not a great situation to put yourself in or your company. So again, we talked earlier, like what's not on your credit score. So these are the things that do not hurt your credit score. It does not matter where you live or work. It does not matter how long you've been employed. Now, for lending, it does matter how long you've been employed or how long the business has been established. So just keep in mind that there are two things that from a lending option they look at, but this is just for your credit score. Checking your own credit, like I mentioned earlier, if you go onto that annualcreditreport.com, it does not hurt your credit score. You are allowed to look at your credit. Now, if you're pulling it from a different site and you're paying for it constantly, that is another soft hit. And of course, that will show up. Your age, your education, married, divorced, that does not impact your credit score. This is one of my favorite slides that we talk about when I'm just talking to people about general, just how it impacts interest on loans. the higher your credit score, right, the lower your interest is, and you're more able to get more credit, correct? So as you where you see the arrows there, this is just a really good snapshot of how much interest you would pay if you had a lower credit score versus how much interest you would pay if you had a higher credit score. So 60-month new auto loan for 20,000, if you're in that 590 range to 619 and your interest, you're going to receive an interest rate of 14.51%, and your monthly payments are going to be a lot higher, but your total interest paid over the term of that loan is a little over $8,000. Where if you had a higher credit score, the 720 to 850 range, you'll see that you're qualified automatically for a lower interest rate, your monthly payments go down, and you're paying way less interest over the length of that loan. So that is just a really good snapshot to take into consideration when you're looking at your credit score and trying to build it up or even just maintain it. It really does impact your ability to get funding and not have to pay as much back. So there's a lot of myths with your credit score, and I'll just quickly kind of go over these because we've touched on most of them. But you know, people hear things from different generations or different financial people that you're meeting with. So it's really important to just kind of know that there are myths out there and to know the do's and don'ts of your credit score. You do not need to carry a balance. I hear that all the time. People think, oh, I have to open a credit card to build my credit score so that I can do the business lending to help my small business go on. No, you do not need to carry a balance. Ultimately, the goal would be that you have the credit open, you use it, and you're able to pay all of it off every month. And that regular payment is what we're looking for. All credit scores are the same. We talked about that earlier. Credit Karma, something on Credit Karma will not show up on your TransUnion credit report. So just be very aware of things like that. We talked about opening the new credit cards. Closing your credit cards will not improve your credit score. So that is a big myth. But however, if you have a lot open, we do advise that you probably not have that many open. You don't want that much debt to income ratio there. Checking your credit score, that will not hurt your, check your credit score. Highly advise that. The biggest thing that is the myth is that when you're co-signing for a loan, so you're in a partnership or you have children or you're helping anyone in your family or even a friend, you're helping them open a loan that's in their name, correct? Well, you are a co-signer. So that actually is your loan as well as the person who you are co-signing for. And it does affect your credit. So anything you do with someone else outside of your own social security number is going to impact your credit score. So just keep that in mind. Co-signing will affect you if not taken care of. So as I said earlier, I know life happens. Sometimes your credit score goes up and down, or maybe you just didn't put a lot of thought into it until you got stepped into this world of I want to own my own business or I want a new home, things like that. So we work every day with people on how to improve your credit score. So here's some tips that we've touched on a little bit, but just as a reminder, just ensure that your data is correct. Make sure you're checking your credit report. Make sure that if you see a delinquent account on there that you are putting a plan in place to make it non-delinquent. We talked about the car shopping. Do that within a certain period of time. It's recommended 14 days. What we really recommend is go get pre-approved. Come to your credit union, go to your bank, get pre-approved before you go out shopping and doing a lot of that, because that will help and keep them from doing those inquiries on your credit score. And also you already know what you're able to afford, and it really helps with your shopping process. Credit card debt, pay it down. Figure out what method works so that you can get that paid down tremendously, so that when you're ready to apply for new credit or purchase your house or look at business lines of credits, things like that, that your credit card payments are down so that your credit score is higher. Moving revolving debt to installment payments. So, you know, if you have a lot of credit cards, one of the things that a lot of financial institutions in Park likes to recommend is let's try to consolidate those, not close them, but consolidate that payment into a personal loan so that you're getting it at a lesser interest rate. Credit unions in general just are member owned, and everything that we make goes back into giving back to our members. So our interest rates on credit cards are way less than the big credit card companies, which just kind of give everyone the same credit rate, right? So they're typically at 24% or higher, no matter what your credit score is. So take that into consideration. Minimize new accounts. We talked about that. Try not to open a lot of new credit. And then biggest thing is, how do you maximize the credit score? You've worked really hard. You've looked at your debt. You've looked at what your credit report has. Now, how do you maximize it? 5 or more bank cards. I'm not sure that that's necessary, but that's one of the tips they like for us to put in there. Avoid consumer finance companies. We talked about that earlier. 4 years in your credit file. So, if you have a card and you were able to make the payments on time, typically the recommendation is to keep that on your credit report for 4 years before close it or anything like that. Accurate information. And then of course, keep your balances under that 30%. We can't recommend that enough. That is very important. And it really helps boost your credit score really quickly. Making those payments on time, making sure that anything that you're purchasing, that you're mindful that you can actually cover the expense before you put it on a credit card, so that you don't have to pay that high interest over a long period of time and it builds. There are lots of great products that financial institutions have. At Park Community, we have secured credit cards, we have credit building loans, lots of options. So if you are in a situation where you wanted to explore those, please go to your local credit union, come to Park, go to your local banks, ask what these products are. They're really important to help you, and they're built to help you get to that next step. So as you're building your business and looking at what your needs are, have those open discussions. It's not necessarily about just getting business credit. It's your personal credit and how that impacts your business. So those products are available to you, and lots of people are here to help. And like I said, I'm a certified financial counselor, and we are working to have everyone at every level of our credit union to be that as well. So lots of experienced and knowledgeable people here available. We touched on the authorized cosigner user earlier. While it is a great way to build credit, so for instance, if you have a young child, or if you're just starting out in a business and one of you has a higher credit score than the other, becoming an authorized cosigner, user cosigner, actually does help the other person build their credit that has maybe 0 or a lower credit score. But if those payments aren't made on time, by either you or the other authorized user or cosigner, then guess what? It impacts both your credit scores. So just use that with caution. We talked about how do you rebuild? The number one thing is you pay off any outstanding past due balances that you have. You prioritize that. You catch up, you pay off any debt collections that are there. And if you don't have any, it's just a matter of how you open those credit building products and things like that I just touched on. Secured credit cards, credit building loans, again, great ways to really step into that and start building credit. So those are the best ways to rebuild credit. Some healthy habits, which you've already heard: make every payment on time, right? Every month, make your payment on time. Keep your credit balances low. Don't apply for new credit. Don't ignore the bill. They're going to keep coming. And then of course, review your credit report annually. So I know that it's kind of repetitive information, but you hear it, you know it, you're going to create those healthy habits. And sometimes it's hard to always remember that, oh gosh, I need to check my credit report, until you're actually looking at some financing, and sometimes that sets you back. So if you're in it earlier and you know what's going on, then you know when you're walking to the table to ask for that line of credit, or what next steps are for your business credit card. If you're ready to do that, then you're already here, and you know what your credit score looks like. So I did talk earlier about some extra services that we have. Not only are we all certified financial counselors at Park Community Credit Union, but we do partner with Green Path, which is a third-party financial counselor, and they can kind of take it a step farther than what we can. If you wanted to talk about debt management, if you wanted to have someone help pay off the credit bureaus, or sorry, credit cards that you have, things like that, we can put you in contact with someone that can take it the next level. So all financial institutions should be able to do that, but Park takes pride in making sure that we really help our members from, first question all the way through that financial journey. So I wanted to just make sure I covered on that piece. And I am a fast talker, so I am sure I blew through a lot of information really quickly. So please don't forget to put some questions in the Q&A. I would love to answer them as we have time, but real quick before we jump into that, I wanted to just provide additional websites on some of the things that we talked on. And just kind of a quick review. Myfico.com is a good resource. Myannualcreditreport.com. That's that place where you can get not that place, the website where you can get your annual credit report. And they actually do it more often than annual for free. You can also go to your government pages to do that. And then there are the 3 credit bureaus, their direct websites. And again, go there if you ever feel like you need to put a credit freeze or a credit lock, or if you just want to inquire what their practices are. It's a great thing to go ahead and set up and have passwords for, so you can get to it really soon. And just a quick little personal story before I wrap. So recently I had some fraud on my debit and Park Community. It was the debit card I had with Park, and they shut it down really quickly. But it kind of went up a little farther than just my debit card. They had access to my name. I don't think they had my social security, things like that, but I had already logged into all of my credit bureaus. So I was really quickly able to jump on and do a credit freeze. So that means that anytime that anyone tries to do anything on my credit, I automatically get a call or an email or a text that says, "Is this you?" And then that way I can decline it, accept it, things like that. So it's a good resource that those credit bureaus have. Highly suggest it. And then that's really all I have. And I know I touched a little bit on business and what the credit score is, but your personal credit score is very important. And so these are just kind of the high level tips and tricks on what you do with your credit.
Mhm.
So,
Thank you, Ellie. That was
of course.
fantastic. So if you have any questions or comments, now's the time to put them in there while we have Ellie on the line here. But let me ask you about locking your credit. I mean, is it a good idea just to keep it locked at all times?
That's like one of the additional myths that you hear. It expires after a while.
Does it?
So unless you're really going in there and making sure it doesn't expire, I keep mine locked pretty frequently. There's just a lot of fraud.
Right.
But could be a hurdle if you are in the middle for your business and applying for lines of credit, things like that. If your credit score is always locked, that could really be a hurdle. So if you're doing it, just be aware of kind of where you are in that process and unlock it as needed.
Yeah. It's interesting that in the world of credit, you get dinged for a lot of things that are actually you being a good consumer. Like if I'm shopping around for credit or trying to do the right thing to find the best deal, somehow it's not the right thing to do.
Yeah, I know. It could be very confusing and hard. And I know, like, if you have like a high credit amount, like you're carrying a credit card and you've reached you've maxed it out, and then you find out that your bank next door is offering a lower credit rate, 0% interest for so many months. Of course, it's the right idea to maybe cancel the card you have and then transfer, do a balance transfer. Do it with caution. If you're doing it frequently and you're taking the deal every 6 months that it comes up, or you're opening an account and closing it every year just to get the deal, that's when it's not a good idea.
Mm-hmm.
That's when it's kind of flagged, because all you're doing is just opening new lines of credit and just carrying the same debt.
Mm-hmm. Yeah.
So
There's a couple of questions. Rod says, if I don't use my credit card, will it keep my credit score stable?
No, yes and no. If you have a credit card and you're not using it at all, I mean, you have the line of credit open, but you're not showing the credit bureaus that you're making regular payments. So if you remember, and I can go back to you can't see my slide anymore. The wheel where it says how much impacts your credit score, your 30 keeping your balance is under, and then there's that mix of credit and things like that. So all of it impacts it. So while not using your credit card is a good idea if you know how you spend personally or for your business, but not using it at all could eventually. I know that's what you said, David. It's really hard, right?
Yeah,
You try to do good, but yet it could impact. So
right.
you just kind of have to be aware.
Yeah. He also says, if I'm late on my mortgage payment, will it affect my score?
Absolutely.
Yeah.
Absolutely. All lines that you've taken out, credit card, mortgage, business accounts, things like that, usually have a grace period to make that late payment. So like if you're due on the first, for mortgages, you have 15 days until it's reported to your credit bureau. Every financial institution is different, but for Park, it's 15 days. After 15 days, we'll report it to the credit bureaus. So you might get charged a late fee because that's what you've agreed to when you got the mortgage with us. But the actual reporting to the credit bureau doesn't happen until that 15 days. So you have a grace period. But if you're past that and you are late after 15 days, it goes to the credit bureau. Let's keep in mind that it takes 24 months is what it said. Correct? I might be wrong, but yeah, it takes a really long time to bring that credit score back up from that just one late payment. So prioritize. Like I said, if you're in a situation where you think something's going to be late or you can't make all your bills, including mortgage and your credit card and your car loan and goodness, insurance, things like that, prioritize and then work with the other ones to see how you can make payment plans so that nothing is reported.
All right. So I guess if you are in trouble, it's really important to contact your creditor because they're the ones that are reporting to the credit bureau. So if you can come to some sort of understanding or work something out then and prevent that, then you're ahead then that way. Is that a correct statement?
Absolutely, absolutely. We have every financial institution has this, but Park, we have our whole credit services team, right? And they work with customers and members all the time that have a hardship. Lots of like for Park community, we have hardship kind of forgiveness, like you can skip a payment for 1 month on a credit card. We don't advertise it a whole lot. It really is kind of, you got to call us and let's figure it out and see where you are. But yes, get to know your bankers, get to know the people that you see in there, ask them questions, have them know your name, because when you're in those situations, it's a great way to kind of get you through the hard times.
Right. Deanne says, is it true that if you make 2 credit card payments before the due date, will that boost your credit score?
Well, no, but you're making the payments on time, so that's gonna
Yeah.
boost it for sure. You're paying it off faster. I guess it just really, again, it depends on how much debt you're carrying on that credit card. If you're trying, like if you're close to over your 30% usage on that credit card and it's impacting your credit score, yes, absolutely. The more payments you make, will get that interest down and will help, get that percentage down, so that makes your credit score look better, right? But the actual as many times as you pay it does not impact it. What they're looking for, the credit bureaus are looking for, what we're looking for in any lending option is that you are lendable and that you're making your payments on time as agreed upon.
Right.
But yes, pay it off. If you're able to pay it off, pay it off.
Yeah. Let's see. So Raj says, I pay my balance whenever I can and never paid interest, and I still receive CU rewards. How do bankers make money from me? Is there any hidden fee for using the credit card?
So all of those hidden fees should be non-existent. If
Okay.
you've read the fine line, like if there's an annual fee to have that credit card, if there is what the late charge looks like, if you, I know you said that he pays on time, but all those fees should be in a fee schedule that you've agreed upon. So as long as you know what you're agreeing to when you sign up for that particular credit card, there should be no hidden fees.
Okay.
And then what was the other part of the question? I'm sorry, David. I'm jumped into
Um,
something really quickly.
That was the question. Yeah.
Oh, okay.
Lead up to-
Yeah. Pay it on time though. That's great.
Right.
And yes, you get rewards when you use those certain credit cards, right? Or certain bank
Yeah.
accounts, things like that.
Mhm.
So, if that's what your goal is to build up your rewards, then as long as you're paying that debt back off, you're good.
Yeah. Can you explain keeping credit card at 30%, like number wise is credit card is 500 keep. Yeah, go into that. Go into what do you mean by credit card or 30% of usage?
Okay, so it just depends on how much your limit is on your credit. So, if you, whatever that limit is, so you all can do the math. I'm, even though I work in a bank, not, gonna quick on my feet in math, but
Let's say I
let's
have $10,000 limit. That's
30%.
okay. So that'd be
Keep it under that.
$3,000.
Mm-hmm.
Yeah. Okay.
Yeah,
Good.
and it's, you have a credit limit for a reason because that's what you're qualified for. When credit cards, when Park, anyone looks at your credit score in that pie that I talked about earlier, they might not take everything into consideration, but they know what your annual income is, like once you're applying for that, we kind of gather that information. And then that credit score, and they're gonna go, okay, they might be able to pay 10,000, but we see that they have their mortgage, things like that. So we're only gonna authorize 5,000. Now you can ask for an increase, things like that. So that's why that, you get that limit, the max amount that you can get on that credit card, and then just keeping it at that below that 30%, that rotating. You want less than 30% rotating month to month if you're not able to pay it month to month. And that's really what
Mhm.
that 30% is about. We
Right.
know sometimes you have to carry the debt over. You've made a big purchase. In terms of like let's say you bought a new piece of equipment for your business and it's within the range for your credit card and you put it on that, but you can't pay it off that month. So you're going to carry it to the next month and you're going to add interest again and carry it to the next month. And so that's going to build that percentage. So try to just keep it within that under 30% range. Did
Okay.
that help?
Yeah, I think it did.
Okay.
Here's a question I have. What's the
Sure.
difference between a co-signer and being a guarantor on a loan? Is there a
Oh,
difference?
goodness. Co-signer would be that you are, well, it's just in terms of what product you're using basically at that point, but like a co-signer would be like you and I jointly opened, or you opened a credit card and put me as an authorized user on it, or we're co-signing for a loan together. A guarantor means basically like you're putting up the collateral for a big loan, things like that. So
Just
I don't know all the in depths of those fun terms, but happy to, if anyone wants to dive deep into it, provide some resources or put you in the right lending team that can talk about those big words. But yeah, I mean, that's really all it is, when you co-sign, parent, child, married couples, things like that. That's just both of your credit scores are being taken into consideration. That could impact both.
mhm. Okay. That's kind of a good distinction there. I appreciate that. Yeah, I was just thinking of that when you were talking about the co-signing earlier.
Yeah.
Okay. One of my relatives is willing to co-sign my student loan of 200,000. Wow. Is there anything that he needs to know?
Well, he needs, well, he probably needs to know what your credit score is like. And if that's an individual question, I would
Yeah.
say, we do not do student lending. We would do like a personal loan for that. So if you're going
Mhm.
through a financial institution that's actually doing it, the requirements may look a little different than what we would be looking at. But basically, that co-signer would need to know that they're taking on the debt for you. They are
Right.
actually going to have their personal credit pulled, as we talked about during the presentation. So everything that they have going on will impact the interest rate that is on that student loan. And then you're both responsible for the debt if you're co-signing with them. I'm happy that you have someone in your life that's going to do that, but that's really all they need to know is that If you default, whatever agreement you all come up with, if you're responsible for paying it and you default, it'll impact the debt, their credit score.
Yeah, yeah, everybody's responsible there.
Mm-hmm.
Yeah.
Yeah. I mean, it's a great option. I mean, lots of parents, that's how they build, their children's credit score, right? They put them in a loan with them or get them some kind of credit card when they're younger, but it's, with caution. It's
Mhm.
responsibility, it's teaching, it's knowing that if that's not, taken care of, that could really hurt their credit score and hurt your credit score.
Right.
But it's not to say that it's a bad path. It's just, you have to be very aware of your habits and how you handle it. And that's why those tips and tricks on what impacts your credit score and making the payments on time and keeping the rotating interest or rotating debt on it at a very low percent are super important.
Yeah. Let me ask you this. Let's just say, my credit's decent in the 700s and I just don't pay attention to anything like that. What would be, and I want to kind of get my handle on things and really be a good credit consumer. What would be the top 3 things you would tell me to do today?
Can you get it higher? That would be, let's look at how we can get it higher because you're, in that range, you're getting great, interest rates, right? You're eligible for, lower interest payments and things like that. But if we get it higher, would you be in that A plus range? And, that kind of opens some more availability for other lending options. It doesn't hinder, it just, if you don't have it, but it just is it's a better picture overall, the higher your credit score is. So, the same thing I told, mentioned in the thing, you're at a decent credit score, you're actually at a great credit score, but do you really know what's on your credit score? Um, Make sure you're checking it. What's keeping it from being in the higher range? Is there a way that you can work on that? Those would be like the top things I would tell you. That's probably more than 3, but that's how I would tell you to do it.
Right. So do you think that primarily the effect is the unknowns on your score that, because
Yeah.
if you're paying on time and stuff, I guess that could be the keeping you from going higher then.
Yes. I mean, so like what is keeping you from going higher? I mean, that's what I think a lot of people don't know. They're like, well, I mean, I pay on time. I do everything that it's told to do. Maybe you just have too much opened. Maybe you haven't had enough opened. I mean, it could just be as simple as that, right? And that's where the people get really frustrated with credit scores and credit bureaus because they like, oh, I was told not to open that many credit cards. Yes, but if you've had the same 2 credit cards since you were 18 and now you're like, in your 40s, and you haven't opened anything else, that could be keeping your credit score from really boosting. You might need a little bit more help. I talk to people all the time. They're like, "Oh my gosh, I pay all my bills on time. I paid for my house with cash." They're really good savers and really good at putting their budgets together and caring for their finances. But then when they step into that, I wanna open a business or I want someone needs a car, I want to help this family. All of a sudden they hit a roadblock because they haven't built that credit because they're paying with cash or they're um not keeping it there as long. And people are just like, why is that happening? Wish we knew, but that's just how it's designed. Unfortunately. So you have to be a
Yeah.
good steward.
I read somewhere where like medical debt is one of the top credit destroyers. And I actually checked my credit on this was like a year ago, and there was a $25 bill for some blood draw test or something that I don't, I thought I paid then, who knows, but there it was, dragging my credit down for 25 bucks, like I was some person who was avoiding debt or something, but yeah.
Yeah. So yeah, medical collections are really hard. They happen very quickly. Unfortunately, they just don't give you a long period of time, and maybe you got one notice, but then they don't notify you again until it's already in collections type of thing. And similar to you said, like, you didn't even know it was there, which is why checking your credit report's really important. But I will say most financial institutions, unless you're carrying a lot of medical collections, kind of understand or can work with you on taking that in consideration when you're
Mhm.
looking at it. So, you know, that's the other thing you want to look for. That relationship with your financial institution is really important, especially for business owners,
Yeah,
because your business and personal credit scores and finances are intertwined, but you got to work towards getting them not intertwined, right? So, it's really important to know who you're banking with and building those relationships, because then you can come in and we can look at a lending option and see that obviously you just had surgery and you had so many months and that's why they're all hitting, and what payment plan are you on. We can talk to you about that and figure out, okay, that's not going to impact our ability to give you a loan at the credit score rate that you have. But this is what we can do to get you out of it. But yeah, medical bills, you got to watch them. So, again, being really in tune with what you have going on, check your My Charts, see if those bills have hit. If you've moved
Right.
addresses and you're not getting your current mail or something's gotten lost, I mean, there's so much fraud in our mail delivery system. It's taking weeks sometimes for people to receive bills,
Right.
or even a payment, let alone. So just kind of being on top of your finances, knowing where you stand is really important.
Yeah. Ellie, this has been fantastic, and I really learned a lot today. I really appreciate it.
Well, thank you. Well, and I'll say, I am not your credit deep dive expert. I talk to people all the time, but I'm happy to give anyone the next step if they want to reach out to me directly for some additional questions, or and pass you along to someone here that is the expert in lending or is the expert in small business loans, things like that, because they can deep dive into these credit. This is just kind of above, reminders, things that we all think we know, but we kind of need to hear on a regular basis. So
Right.
I really
Exactly.
appreciate being able to present today.
Yeah. This has been fantastic. And
Thank you.
everything you guys do at Park has really been great for small business, and we really appreciate working with you guys.
Oh, well, thank you so much. We love working with small business. So, come check us out if you haven't already.
Yeah. So yeah, reach out to Ellie. You're on the website, I think, right?
Mhm.
Yeah. Or just contact me. Be happy to connect you with Ellie if you have any trouble. So Ellie, thank you so much. Thanks once again for joining us. And we're going to have you back soon, I think. So looking forward to
Yep.
talking to you again.
Thank you so much.
Yeah. Janet, thanks for driving the ship as always.
Sure thing. Everybody have a
Yep. And we will see you next Tuesday on next Toolkit Tuesday. Have a good Tuesday, everyone. See you
Thank you.
later.